And that means we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through the markets one step at a time, looking at the charts, the price action, the market information, going through the corporate news, anything that we think is relevant, pertinent, interesting. Break it all down, give you guys some analysis so that you can better run your daily routine. And welcome back to our show here on a Wednesday, July 21st, 2021. Got a full panel for you and excited to break down these markets with you guys together. Hashtag Team Tackle right in the chat as you're coming into the conversation. Let's have a fun, lively one as we always do. And if you are brand new to the channel, click subscribe, click the bell, and come back and join us on a daily basis. We do the show each and every day. The markets are live, 12:30 p.m. Eastern. Let's bring the coaches in here. We got Coach Tyler for his regular Wednesday appearance, and we got another edition of Jedi Options a little bit later in the show. Coach Martin, Coach Matt also doing lead analysis for us. Let's bring the guys in. Tyler, first you. How you doing today, sir?
You know, a couple of days ago, I would have said I'm doing better than the market. I don't know if that's the case these days, Tim. Maybe the market's doing better than me, and I'm really happy about it.
Yeah, market's bouncing back and doing pretty well the last couple of days, so it may be doing a little bit better than you. I'm not certain, but it's doing pretty good right now. Marky, what about you? How are you doing today, sir?
Listen, I have a Buddhist monk I am now working with, and he's saying, accept that you're never going to get the pullback you want. Just come to acceptance with that. You're never going to get it. You get the market you get. So listen, everything's up, right? You know, like trading accounts looking good the last couple of days across the board for people. You know, the market is what the market is, and you got to adjust with it.
And Matt, what about you? How you doing today, sir?
Doing good. Excited to be here.
Let's break it all down here, guys. Tyler, first off, fired back off a technical response. Obviously, the markets were down on Monday. Pretty sharp selling on Monday, actually. Quite a different conversation we had. But the reality is we all kind of said, listen, focus on this, focus on the stories, focus on the price action, focus on the charts. Don't panic, don't overreact. The market has fired back a couple of days here. This rally back, Tyler, what does it do for the chart for you? What are you seeing there in the price action?
It's different depending on which index you look at. As far as the S&P goes, even though Monday was nasty, remember the drama, the damage has been primarily concentrated in small caps, which we'll get to here in a second. But look, we've gained back everything. We held the 50-day moving average, fired back yesterday. We have almost gained back all that was lost, the last 3 bars. You're back above all major moving averages. As far as the S&P goes, well, dude, what more could you want? I'm actually impressed that it's holding up so well today. You might have thought after yesterday's big move, up open today, that maybe it gets rejected quickly and we sell off again. I think holding up here is encouraging, and we're at the high of the day right now, intraday. So far, second day of a nice bounce. If I was bears, I'd be so mad right now. I would just be so disappointed. You did not want to see this strong of a rebound, and yet it happened.
Wait a second. There's bears?
They came out for like 48 hours, Matt.
Oh,
they were hollering.
No, and I love what you said there, Tyler, because that's where my eyes were glued at the market open too. I was like, because you have that strong day. There's a chance. I was like, hey, do we drift down a little bit? Not crap. Yeah. I mean, I wasn't really worried about that. The euphoria yesterday, I didn't think could reverse that quickly. But I was like, do you open up and then maybe drift back a little as there's profit taking? It was strong opening.
Yep,
it was a strong opening.
Yeah, it's an extension of the rally off of Monday's volatility. Now, obviously, the S&P stuck that 50-period moving average on the daily, Tyler. It's got a nice price response, and obviously, its character is right there. It's the broadest, most balanced of all the indexes, so it gives the best representation of the market. But you're getting a real fire back off of small caps here today, Tyler. And whenever you're here, I always do want to bring up small caps, talk about them a little bit. Matt highlighted the 200-period moving average earlier this week, how he really liked how the consolidation had brought that time all the way into this pattern to that point. We now have found some support fired back here. Do you see this as bullish action, Tyler, or just kind of good solid confirmation that support is in place? I mean, how are you reading this price action?
Yeah, we've been all over this bounce in both Team Phoenix as well as just the tackle todays. I've been talking about IWM and capitulation and potential support. Look, it's nice when the market does what it's supposed to do. It's nice when technical analysis leads the way. You obviously, I feel like your faith is tested every time. You're like, is it going to happen again? Is it? I mean, maybe this time's different. And then this time meaning, this has been major support, 2100 on the Russell, 210 on the ETF. You get the test on Monday. You're like, well, are they going to come? Buyer's going to emerge, and then boom, they come in force. And now in hindsight, it's like, oh yeah, duh, you should have bought it. It was at support. It was at the 200. I mean, it's easy to say now, but it was a little bit dicey there on Monday. I think this is very impressive. I think it reinforces the range. Speaking of follow through, I mean, look, these were the beaten down names, the lines, the cruise lines, metal stocks, financial stocks. They were beaten down the most, perhaps the most prone to get rejected on the bounce, dead cat bounce, oversold bounce, going to get smacked. And it has not. These are at the high of the day. You're getting follow through after yesterday, really strong open. Just echo what I said on the S&P. I'm impressed by how well this is holding up. And it's a sharp changing character from just, 2-3 days ago.
Matt, for you on this one, because obviously you did really like that support zone and it did find it and fired off of it. Now we're back up in the middle of the range. For it to ultimately become bullish, does it have to break the highs up here? Or do you think if we can get it back above these MAs, it's starting to show some character in that regard?
Well, it depends on what happens at those MAs. You certainly could get a scenario where you have a higher level of support going into a potential breakout of that 234 level. So it really depends if you get some hesitation at those moving averages. If you just V-shape into that, no, you're still in some degree of neutrality. But until you do ultimately break 234, yeah, I mean, your intermediate is neutral. Now your primary is most likely neutral. You said I like the support bounce at 210. I think everybody in the market likes 210 on IWM. I think literally it's a very, very well-known support level. Historically, you see the horizontal line on Tyler's chart that's very, very consistent right there at 210. The 200-day moving average is just and I think the reason I like it a little bit more this time than last time is because the 200-day moving average has had a little bit more time to catch up. And I just feel like that's a very easy long-term analysis. When you skyrocket and you go gangbuster like IWM did for 4 consecutive months from November through really kind of February this year, it got too fast, too far, right? We're talking about an index of 2,000 stocks that went gangbuster up like 35%. That's a lot in a very, very, very short time frame. And so when you see that in an individual stock, it gets a little concerning of that type of movement continuing. When you see it in 2,000 stocks, it's just something you don't see very often, quite frankly. And so to allow it a little bit more time, to allow those longer term moving averages to catch up to it, I think it does give a little bit more credibility and a little bit more. It solidifies that support level at 210 a little bit more when you have that technical backstop of the 200-day moving average. You can push those chips into the middle of the table with a little bit more confidence, even if you are holding a 2.7.
Yeah. Marky, what about you? I mean, this represents a lot of the, smaller companies in the market, obviously, as a small cap index. It's been one of those that's not participated in quite some time. Tyler's here, so we're going to focus on it just for a second, but I just want to get your commentary. Any thoughts on the IWM as well for you, Mark?
The only thoughts are like, listen, like I love playing off support and I love playing off support a multi-month. It can become tricky, right? You got a lot of downward pressure and then you V-shape off it. It's easy to miss these type of signals sometimes, because you're not getting these classic reversal pattern type things. And that seems to have been the character of the IWM during this, what is it going on now? 6-month consolidation pattern. You don't hang out at the bottom for a few days and then break, multi-day resistance. You bounce, you bounce, and it's the character of the index. And that's the only other thing I'd point out.
Very good. By the way, the character of the biggest, mover in the markets over the last couple of months has been the Nasdaq. It's been the most bullish. Let's move on to the tech sector here next and kind of take a look at what's going on here. Obviously, tech is still going to be one that everybody focuses on. It was one of my picks from our Queen's Court here yesterday. I did like that Oracle potential breakout, but it's not just that. It's been the leader in the marketplace for a while, fired back after 3 days. After dipping below those MAs, Tyler, does this change the nature of the trend for you? Do you still see this as just a breakout play moving forward? How do you see tech right now?
Well, I think the one takeaway from what happened with the sell-off and the rebound is the stocks that got hit the hardest are bouncing the hardest. The Nasdaq is up 0.3%. It really hasn't moved that much for the last 2 days compared to the craziness in small caps. But quite frankly, they don't deserve it. Like, you don't deserve it, Nasdaq. Give me a break. You barely got smacked. You deserve a weak sauce bounce. It's those small caps that were down 20, 30% that should get some love here. So, I have no sympathy for the Nasdaq. It's very high, very close to the highs, barely got hit. Does this change my outlook on the Nasdaq? Well, I mean, let's use the Russell as the analog. This thing ripped a lot, right? Big rotation back to growth. That rate of ascent is unsustainable. This deeper pullback than its predecessors, I think, is the Nasdaq trying to find maybe a more sustainable trend, a less steep trend. I think that it's a little different now. One reason why would be you now have a bunch of earnings announcements coming up on these big tech stocks. If they don't respond well to those, I think it's going to be hard for the Nasdaq to keep up this pace. It's not bearish by any means, but I would not be surprised whatsoever if the rate of ascent slows.
Matty, what about you? This is 1A for us at Tackle Trading. We've had it as the strongest. Obviously, the S&P still looking very, very healthy. We talked about that one. What about you here on the Nasdaq? What's your read on the technicals?
Well, I mean, it is 1A, and I do think the Nasdaq, the actual futures chart, does make it look a little better technically when you're looking at that, given that you're seeing kind of all the closes and you get a lot of overnight action in the futures market, specifically the last few days. So when you're looking at the Nasdaq here, yeah, it is 1A. It's held up its support levels a little bit better than the other indexes. You're looking at the Dow and the Russell as neutral at this point. But when you're looking at the two indexes that are trending as of right now, the Nasdaq and the S&P, the Nasdaq simply held its support levels a little bit better than the S&P did. And really, for me, that's the key difference on the chart. S&P broke down through a little bit more. Nasdaq didn't. Nasdaq's going to have an easier path to recover.
Yeah, I'm with you there. But the path to recover is obviously a little bit easier, a little bit smoother. I like it as the retracement and the potential breakout. There's so many good plays in that sector right now.
Well, and the S&P is the broadest collection of all stocks that represent the market, right? But the Nasdaq's the one that has the Nasdaq can be very specific. When it gets a theme behind it, it can run very aggressively.
Yeah. Last one on the index front, by the way, and everything's bouncing back here. A couple of 2-day rally after starting the week on the red note. We are back into the green here for most indexes, obviously on the entire week. One of them is the Dow Jones Industrial Average, and this one's setting up on a different technical potential pattern here, and that's just a breakout up here after consolidation. Tyler, these types of stocks, financials, industrials, those consumer staples, even some of those had rotated into more neutrality the last couple months, but the Dow's now looking at a breakout at 351 on the ETF, 35,000 on the futures market as well. Do you like this one as much as I do, Ty? Because I'm staring at this one thinking, man, how do I get a piece of this? How do I get participating when that breakout occurs?
Yeah, I think it's a similar logic and psychology behind what's going on in the Russell, right? Like who is not interested in IWM if it takes out the high of its 6-month range? Same logic applies with the Dow. Who's not interested if this breaks out after resting for 3, 4, 5 months? So definitely interested. And it's unfortunate that it's the dive this past week and Monday, because it was almost there coming into this week, and then you had the upset. Just goes to show that market's on its own timetable, and as much as you maybe wanted it to break on this attempt, it's got to give it another go. But yeah, I think it's good, and this would signal some of the cyclical areas, industrials, financials, basic materials, that actually have not done as well. If this breaks out, I think that bodes well for that area, which should also boost too. So yeah, I like it over 351.
Yeah, I like it as well. And I had a Dow component, Coca-Cola, obviously report earnings today. We've had a bunch of the banks that are obviously in the Dow report last week. And Matt, I like this as a potential breakout. Are you on board with me here with 35,000, Matt? Mark?
I think you, me,
everybody,
my dog,
are we all on the party? All right.
I got 4 dogs in my house right now. I think all of those would be on board a 35,000 breakout on the Dow. It's just one of those moments when it does occur, and it will occur. It's just a matter of time. that the significant whole number just stands out.
Mm-hmm.
It just stands out. It's like a magnet to the market. And so, yeah, I do think it could be a challenge to break out of that level, given the current market or lacking a current market theme. I mean, we've seen the Russell do this for how many months now?
Oh, it's been almost
8,
6 months, 7 months.
6
Yeah.
months
That's a
now.
long time.
We saw Netflix. Like, we'll get into Netflix earnings, but how long did Netflix stay neutral?
It feels like a year
Still,
and a
and it
half.
might be another year after
Yeah.
today's response to earnings. So it can take some time, but ultimately, I think everybody believes the breakout will occur. And when that does occur, whether it's, later this week, next week, or 3 months from now, yes, I think everybody will be looking at 35,000 breakout on the Dow.
Yeah. Keep an eye on that one, obviously. And it's been, the underperformer. When you catch a breakout like that, though, Matt, the longer the base, the higher in space, like Tyler likes to talk about, it's going to quickly vault up if we do catch it with the right news and the right volume.
I love those Johnny Cochran statements, right? The longer the base, the higher in space. You got to love that. What I do like about the Dow Jones right now is I do like the fire back action following the break of the 20 and the 50-day moving average. That could have got ugly, guys. That could have got ugly very quickly. And the recovery, I think, adds to some stability here for a potential breakout. And because you did recover fairly quickly, you will be seeing that pivot point right there south of 34,000 as a potential increase in support as it does work its way back into that 35,000 breakout level. And so I do think, more than anything, I think the last 2 days of reprieve just gives us all a little bit of relief that this could have got a lot uglier, guys.
Yeah.
That was a nasty Monday.
It felt like
no buy futures.
That's a really good point, because it felt like a quick trip to 33,000. By the way, I felt like we were moving into a Russell 2000 situation.
We still could, right?
We still could do that.
It still could, but you never know.
The three bears out there were like convinced of it, that it was going to happen. But listen, I'm not much of a momentum trader. I am going to be glued to the halftime report, though, for your momentum analysis in the current patterns in these markets, because it will play a lot. Because it will play a lot in my decision making. Because while I don't trade momentum, I will sometimes trigger into trades based on Tackle Trading's momentum analysis, because it's so darn good, to be honest. So if you're like, all right, this is a go signal, I'll be like, all right, I'm going to add some exposure in some areas, in the areas I like. So I'm going to be glued because the patterns are a little wonky right now. So I'm going to be glued to the momentum analysis.
And I love that, Mark. One quick point on all of our jokes on bears, at least for me. My jokes on bears are always market related, like market bears. There's always bears in stocks.
Sure.
Market bears.
Oh yes, market bears. Sure.
Market bears. The perma bear, the one that bets against the market, repeating the crisis, stuff like that. That's the bears I'm talking about, are market related bears.
Well, and every one of us know that some of the smartest guys in the room, in any room we've ever been in trading, have been people who individually love shorting and becoming bearish in
individual stocks is a different analysis.
But that perma bear who always thinks Chicken Little is going to have the sky fall. No,
market can't go higher than this, right?
We can take jabs at those guys. I'll be taking jabs at those guys.
I don't think it's a bold statement that the Dow is going to be higher than 35,000 one day, right? Like that's not a bold statement. That's the nature. Mark Tyler talks about this stuff all the time.
One day could be Friday.
Yeah. All right. Indexes wise, by the way, a lot of the backs of the strength has just been a technical response to the intraday. We've had a couple of big earnings reports, actually, and even one of the biggest names out there, Matt, even Netflix. It did not exactly excite the market, yet the markets are firing back. I think a nice technical response through the week has been really the story so far. As we move through these indexes and stock analysis here, Tyler, I do want to get your take on a couple of these sectors, though. We look at them so often as part of our top-down analysis. I know we've had a nice price response here on like materials and energy, but are they out of the woods yet? I mean, they're looking like bearish retracements to me. So maybe I'm throwing a little bit of cold water here, but tell me what you're seeing here in these two areas of the market.
Listen, energy's a big boy. It can take all the cold water you want to throw at it, Tim. It doesn't care. Okay, you feel confident. You want to throw cold water, you throw cold water. They can take it, Tim. Yeah, maybe this bounce gets rejected. Maybe it's an oversold bounce. The last couple, so this is the energy sector first. The last couple of bounce got rejected and we made lower highs. So look, you want to be open to it, right? You want to be open to that possibility. You got to anticipate all potential scenarios here. Could be a dead cat bounce, could be a bear retracement. But so two questions, right? For me, the first question is, do you really want to play energy to the downside here, right? Is that the way you want to position yourself? Are you hoping that this rally gets faded and energy sells off again to 46? Is that the way you want to play this? If so, then fine. Wait for a reversal candle. Let's look for evidence. So far today, again, small caps are ripping. This bounce is strong so far. You just don't have the evidence yet. So you got to wait and see. Me personally, I still like this stuff to the long side. I prefer to look for excuses to buy versus excuses to sell or short. Certainly, if you are going to short in this market, you can make a stronger technical case going bearish on energy than tech. That's for dang sure. So I think all these names where you're getting lower lows, oversold bounces, those are top of your list if you want to be fading this rally. I just think for me, the stronger the bounce, the harder it is for me to step up and short this thing when it rolls over, because it's just it's a strong bounce, and that just makes me less confident.
And can I add something to that, Ty? Wouldn't you rather, like, if you're looking at this from a trading perspective and given all the themes in the market, and you're seeing a bearish retracement in energy, right? That's at least that's what my read is technically, is I'm seeing a bearish retracement. And you could look to short that on a doji and trade it down to 46. You do got that pretty solid backstop of the 200 underneath that, but that could be a good short-term short trade. And I'm sure there's some, I'm positive there are some setups that are looking very, very, very shortable out there.
Mhm.
Or would you rather just wait to see if 46 gets hit again and buy?
Yes.
Yeah. Because by that time, the 200 period moving average is going to catch up.
Matt, literally, I literally did not mean to respond because I knew who the question was related to, and I had an audible response to your question. Like,
yeah, and it's a little bit of a rhetorical question. I think you would just wait to see the retracement work itself out, because we've seen this game before, right? Where you see these bearish retracements that came after overextended bounces. And if this market was 2016, I'd be like, oh man, let's light it up, right? But I've seen too many high base setups happen where it breaks out. I've seen too many reversals in these scenarios where it's just be a little patient. Let the analysis work itself, and there could be some really, really good opportunities in an oversold situation in energy on the long side.
Yeah, patience is probably the right approach. Obviously, we've liked this sector since November, as it's kind of fired back and started.
Man, I'm becoming the perma bull in this.
Dude, there's lots of we got room on the bandwagon. You know,
oh man,
maybe I got to bring Timmy the Bear back. All right, XLB is the next one here. I do want to get your read on this one. Same basic analysis for me, guys. Same patience and same thing, right? Because I see it under another bear retracement here.
Yep.
Think about it. Yep. Oh. 1 day sell-off, no continuation, and pops right back into resistance.
Listen, I got a question for y'all because it impacts my trading, probably a lot of other people's trading too. All right, so, listen, I dabble on the way down. I do a little dabbling on sell-offs, nothing major, but I do dabble. I find it naked put here, naked put there, but I'm waiting for like clear signals. But it's hard in these because there's this, what if it V-shapes here, right? What if it like just skyrockets, whatever phrase you want to use? What if you have rapid ascension in price off the sell-off? Then I miss out a little bit. But is that still the prudent accord? Maybe dabble a little bit,
Mark.
But wait for those clear technical patterns to emerge before you get too heavily involved.
I don't know. I've never liked V-shapes. I just don't see them continuing. I don't find them to be stable and consistent. I don't think you can look at your probability analysis the same way. And I also don't think this market is in a V-shaped recovery market. There's too much mixed data out there to push V-shapes.
Yeah.
And quite frankly, we still don't have a theme.
I 1,000% agree with that. I reiterate that kind of stuff.
Like the market, one of the biggest problems in the market right now is there's no unified, universal theme that makes it easy.
1,000,000% agree with you. More than 1,000%.
There's obvious themes that could,
but
though.
the
It's just that
FOMO is real, right? Like when you see upward price.
Anything that you could put out there right now, you could throw cold water on.
All right, I'll try one.
Try one.
Earnings season is going to be one of the best in 13 years, and we've got 85%.
So it's last quarter and the quarter before that, and the quarter
before that.
Valuations have caught back up after a period of consolidation to where forward PE ratios are in line with historical averages.
That's not true, actually.
That's not a true statement, and neither is that bearish or bullish. It's mixed.
The infrastructure deal is going to pass.
The infrastructure deal might not pass, and we don't know exactly what the parameters for that infrastructure deal.
And if it does, it could lead to more inflation as more money, and that could trigger that whole cycle again.
The Fed is going to magically give us clarity in August and tell us exactly what we need to know for the next 2 years.
That's just good luck analysis.
So now you're just really
now you're just making stuff
I was just trying the whole time. But so
listen, I mean, here's the thing, and this is like.
Hey, here's the thing. Here, see, all of those are very complicated. Here's the thing: the economy is reopening up.
And I was just thinking that, Matt, because and I've gone on this in the Sunday night prep classes. Like, we've had easy themes, and when 2017 will still remain the easiest theme I've ever seen, and it lasted forever.
Corporate tax
cuts, economy around the synchronized global growth, tax cuts, easy theme. Economy reopening, easy theme. Fed pivoting in 2019. Hey, we were kind of hawkish, but that's not going to happen anymore. Easy theme. I mean, sometimes the themes are just easy. And I don't want to be the smartest guy in the room where I'm like, well, I'm going to try to deduce. I want the theme that everybody sees, right?
Yeah.
Now, don't get me wrong, Jim. I feel earnings have been really good. And you are starting to see some firing off responses to even some lukewarm earnings responses that we did not see last quarter. And, take CMG, for example. CMG comes out today, reports 746 versus 646. Revenue came in line at 1.9 versus 1.9. Revenue increased 38.7% year over year. Digital sales increased 10% to a total of 48.5%, which is 11.5% less than it was last year. This is a lukewarm earnings. Lukewarm. It is down the middle, and yet the market is just firing off, just absolutely firing off. So this is something that I just don't think we would have seen last quarter.
Matt, do you ever play the alternate reality game where if CMG had reported earnings last Friday, would it have gapped down on the same numbers?
Of course, but I don't know.
It's funny how that works, right?
There are specific days you look historically and be like, I wish I would have reported yesterday.
Like sometimes you'll hear us make the joke on the halftime report. It's a bad day to make an IPO today.
And honestly, I don't think it was a good day or a bad day to report earnings. There are some data points that are very subjective for me that you're seeing, and CMG is just one example. Whereas last quarter, even with these, CMG could have reported better numbers than this last quarter, and it would not have fired off like this. There was nothing firing off last quarter, despite last quarter's earnings being one of the best earnings we've ever seen in market history. And so you are seeing that a little bit here. United Airlines, UAL here, they report negative 391. That the expectation was a negative 417. I believe that's 7 consecutive quarters that reported a loss. Revenue came in slightly above expectation of 5.5 versus 5.2. Revenue resulted in 270% increase in revenue. You're seeing a little bit of fired off response here, right? Here's a kicker on UAL. And Mark, I want to get your take on this. They said that the new Delta variant that everybody is seemingly scared out of their minds about, they said it's had zero impact on bookings.
Yeah, listen, I've tried to, because listen, COVID is a touchy subject in the sense that it's a real thing, right? And people die. And so, but you have to be analytical in the situation. And the plain and simple fact is that we are not seeing the per case hospitalization or death things with COVID. It's real. It impacts people. You should get vaccinated. I'm vaccinated. I'm a big proponent of it. but you're not seeing the evidence in the lethality, hospitalization. In fact, you're seeing the opposite from a scientific point of view, nor are you seeing the societal impact in restaurant, the things you go to, because there's all kinds of statistics out there on, average restaurant stuff and traffic. You're not seeing the societal impact of it either. So from what we know from a scientific and what we're seeing from a societal standpoint, it just doesn't seem to have any long-term impact other than the headlines you're seeing that, well, we could all debate that in a separate over the water cooler, why news media likes to run headlines like they do. But it's
clickbait. We don't need to debate it.
What it's doing is creating, for me, in select areas, opportunities that I think are good opportunities in which the technical sell-off has been exacerbated. Now, I have no idea how to play airlines. I want to own them a lot. I want to own Delta specifically. I have the messiest chart in the whole world.
Yeah, they're all gross.
Yeah, and I don't have, you know what's interesting, Matt, also, I'm not seeing high volatility either on Delta in this sell-off. I haven't seen the volatility spikes that indicate real fear. I looked at the options because, it's a go-to move of mine. Volatility picks up, find the company you like, go get a good return at a price you'd want to own. Delta volatility, in the 40s. That's not like, oh my gosh, fear level volatility.
Well, and Mark, you're also talking about a bearish downtrend on some of these airlines, Delta specifically, that was just riding the 9. You really didn't see any random bouts of volatility on this path down to the 200-day moving average. And then Delta, American, and like many other cyclical stocks, they got caught up in the volatility recently when the market broke support, but it's recovered very nicely since then. We've seen United, we've seen a couple of the other airlines, but we haven't seen the Delta variant specifically really kind of impact from a numbers perspective, maybe from a mindset perspective, but not from a numbers perspective.
Well, on that note, I do want to get my thought in on that.
Yeah, go ahead.
It wasn't just Delta and United, because those two airlines did talk about this, but even Coca-Cola, the CEO of Coca-Cola and Chipotle also mentioned the Delta variant not impacting consumer behavior in their earnings reports in the last 24 hours.
Yeah,
well, the CEOs are getting this question, Matt. They're getting this question.
Well, they're getting this question because it's being reported nonstop in the news media right now. Delta variant, you cannot turn on media right now without seeing some type of just a lot of, it's in our face nonstop right now, right? But yet for a while now, all of us have been told we get vaccinated, we can go back out, live our lives, correct? And from this data that I've seen, I certainly understand these CEOs getting the question. It's a relevant question. But from the data I've seen, and correct me if I'm wrong, guys, I'm not an expert on this by no means, but from the data I've seen, if you are vaccinated, the Delta variant does not have an impact on it doesn't have, let me put it like this. It doesn't kill you.
No, that's right. Yeah.
You get sick, right? From the data.
Matt, specifically on the numbers, because this is an area where I got a lot of my money.
Yeah.
It's an area of the market. These reopening plays, I've been all over them for the last 15 months. I've loved them. They've treated me well, and I continue to look at them. So I am going to personally, from my own Mark Justice selfish standpoint, dive into the numbers, specifically on vaccination. Listen, vaccinations are never 100%. No vaccination ever is. Yeah. You are not seeing any abnormal behavior on the Delta variant versus vaccinated populations that you would see in any disease, cold, flu. I don't care what it is on the vaccine, i.e., long story short, vaccines are working, and the Delta variant isn't showing any extra signs that it is affecting vaccinated populations.
And Mark,
that any other would.
So. Yeah, and correct me if I'm wrong, but the vaccine, from a data perspective in hospitalizations and deaths, basically stayed the same. Whether it's the Delta variant or another variant, if you are vaccinated, you're not going to the hospital.
Correct. I mean, once again, there's always
like
a case,
90.
Right?
I saw like 99.2% of recent hospitalizations or deaths are all vaccine related, and it has nothing to do with the type of variant you get. And again, I don't want to.
You mean unvaccinated? You said
people that are vaccinated, they do not go. Let me rephrase. People that are not vaccinated are the ones that are going to the hospital, or the ones that are, having those ultimate, worst case scenarios play out, correct?
Mm-hmm. Mm-hmm.
Correct.
Which means, yes, these CEOs are going to get this question, but the answer from all CEOs is going to be the same. Nothing has changed.
Well, because the data doesn't reflect any
Because the
changes.
data hasn't changed.
They're answering it based on data, and that's exactly right. And so I thought it was notable that I saw some of these big companies at least address it and answer that question, and it's been in the market's consciousness recently. So I did think it was interesting the way that they answered that, saying, hey, no, this is not impacting our bottom line demand or orders.
And also specifically to the Delta variant, how many different variants have we had so far in the last year and a half?
I don't know, to be honest.
Like just in the U.S.,
several.
six?
Listen, this is once again,
six?
this is where my money is. I study every one of these variants when they pop up. I'm like, because you have to keep an open mind. What if something happens? Because while I generally believe in the buy and hold and screw you, you're not taking my shares. That's as long as the information doesn't change. And we've had a lot of them.
Yeah. So I guess my point is, when you have the sixth variation in a year and the data really hasn't changed from a vaccine perspective, I'm willing to bet almost every CEO is going to have the exact same thing to say.
Mm-hmm. Yeah. And they are in coordination.
Like the Delta variant has not impacted consumer behavior, because that's what we're seeing.
Yeah.
Just in live, you go out there in live.
Mm-hmm.
I don't think that's impacting people getting out right now.
Nope.
Bookings are through the roof right now.
Yep. Yeah, no, I mean, absolutely. No,
but it was just interesting what United had to say, and then obviously Coca-Cola, very similar there. And since we are on Coca-Cola, let's talk about their recent earnings report. Coca-Cola comes out today, reports 68 cents versus 57 cents on expectation, so a beat on EPS. They also beat on revenue at 10. They came in at 10 billion versus the 9.3 expectation. That resulted in a pretty decent 41.7% year-over-year climb for Coca-Cola's revenues. From a pure numbers perspective, a nice beat and a beat there. They also did slightly increase EPS guidance as well. You understand the gap up based on the raw numbers. Tyler, a little bit of sell-off. I kind of like the support battle here, Tyler. Give me your breakdown.
Yeah, so Coca-Cola had rallied in sympathy with Pepsi, if you remember.
Yeah.
And so I think that they buy the rumor, sell the news, I think is what you're getting today in terms of Coca-Cola. This big jump here in the week preceding this, the Coca-Cola was $54, ramped up to 56.5 in anticipation of this, and then another gap up this morning up to 57.5. Look, I mean, it was a little extended in the short run. I'm not surprised you're seeing a little bit of profit taking. Would you have loved for a Pepsi type response where it just goes ape to the upside? Sure, but it just wasn't in the cards, right? So to me, fundamentals confirm this is a strong company in a good spot right now. You want to be a buyer of dips, and so you're waiting for the next fat pitch here, right? So yes, what Matt's talking about is you're coming back to this old resistance level. Could it become support? Yeah, perhaps. I mean, this is an area of interest to me. I think you got to be interested in anything on Coca-Cola here, with the acknowledgement that look at its history. It is a staple stock. It's not a momentum stock.
It's not a swing trading stock.
Yeah. So cash flow type plays, long stock, long-term type plays, I think are have a green light here.
I got a projection to 60 over time on Coca-Cola. I think it does eventually hit that all-time high that it did ding pre-pandemic. I do like cash flow strategies on the way up, though. I don't think it's a, hey, let's run from 56.5 to 60. I think it's a slow, methodical grind, like cash flow as it gets in there.
Well, and to be overly simplistic, I'm pretty sure its earnings are better than what they were back there.
They are.
So from a valuation perspective, if its earnings supported $60 over a year ago, with the rebound we just had, why wouldn't it make its way back there?
Yeah, and let me throw a couple extra bonus points in for Coca-Cola. Coca-Cola's international sales, a massive percentage for the company. You cannot think of Coca. The world, while the United States is still opening up, the world, many parts of it where there's a lot of Coca-Cola drinkers, they are still returning. Coca-Cola, a lot of stadium sales, that internationally. There's still, what bottom line is, there is still a lot. If this earnings numbers growth a full reopening around the world, low dollar, there's a lot of benefits and tailwinds behind price stability for Coca-Cola.
Yeah, I definitely agree with that. And when you're looking at Pepsi versus Coca-Cola right now, and that's just something we like to do, but when you're looking at those, I think the analysis is fairly simple. If you're looking to trade, you're looking for a pattern to develop on Pepsi. If you're looking for cash flow, Coca-Cola does make some sense.
Yep.
But also, I'm glad you brought that up on Pepsi, because if you look at Pepsi, it almost feels like Coca-Cola is a couple weeks behind Pepsi in the same type of
Pepsi's the leader.
Yeah.
Yeah.
So Coke has some room to catch up, maybe.
That the weekly breakout on Pepsi last week was very strong. It was very strong, and it's a legitimate breakout. And you're looking at a high base right now on the daily chart. Let it set up. I do like Pepsi as a tradable asset right now. Coca-Cola, more cash flow.
Cool. All right. We'll do the rest of the earnings roundup here in just a minute. I do want to flash through commodities if we can there, Matty. You know, and obviously those some of those big names are all in that theme of addressing the Delta variant, but we also got some other big companies. We got to talk about Netflix specifically here in just a minute. Crude oil, though, really, really strong fire back here. It took that quick trip to 65. It's now taking a quick trip back up to 70.46. I'm going to need an intraday chart. I'm going to need some analysis here, Tyler, to help us unpack this chart. Obviously, when you break down off support like that and you have a sharp 7-8% sell-off down into old presumed support, we did not know 65 would hold. And Matt, you were dead right. It had to hold, and it did hold, at least here for a day. Tyler, what are you seeing here on the chart?
I had not looked at crude oil yet today. It's my first glance, and man, I'm impressed. I mean, so it's Wednesday, Tuesday, Monday. This did not help on Monday, right? So stocks got destroyed, and crude oil, largest down day in a long, long time. So, hey, this was an area that was really getting beat up on Monday. Energy stocks obviously got torched. This is aiding. So just as this was one of the catalysts, one of the reasons for Monday's drama, arguably one of the reasons why small caps and energy are holding up so well today on this rebound. Dude, I'm impressed. I'm very impressed. Let's see if it can completely mirror what happened on Monday. Give me this green bar, Tim. Give me to the high of Monday's bar. Little rope-a-dope. Gotcha. Just kidding here. Right back up. I mean, this is pretty big volatility. It's not super healthy yet. It's not super bullish, but I'm impressed, man. I'm impressed. This, quite frankly, Tim, would be one reason why I would be skittish trying to short the bounce in energy. If crude's going to rip right back up like this and stay up here, I'd much rather be long energy stocks than short myself.
71 still got some resistance here intraday on that line you're just talking about right there, Tyler, from the doji to where we are. And obviously the fire back in crude does support maybe, some stability in energy is one of the reasons why we've liked energy for a long time. These companies are going to start reporting here in about a week. ExxonMobil, Chevron, those names end of next week with their earnings reports. Matt, 71 here in play as resistance, but this is a really beautiful setup that had developed. The day trade went into play yesterday. The breakup of 67 had a quick trip to 68 here from the cash open. We've been running. What's your read on crude oil? It's a big day.
Well, I mean, crude was recovering on the overnight action a little bit as the rest of the market kind of just built up a little. But it really was the crude inventory data that came out this morning that sparked a little bit of a break and run here on crude from 60.5 to 70.5, and it was on a little bit of an unexpected. I think what was the numbers? It came in at 2.1 versus the expectation of a drawdown of 4.6 million.
First build in like 6 weeks.
It was a build, actually.
Yeah, it was the first build in like 6 weeks. And so it broke out on those numbers, and then it just ran and ran and ran. And now you're forming a high base on the, excuse me, you're forming a high base on the intraday data there that could see some continuation here. Listen, the data wasn't strong, but the price response coming off that support bounce at 65 has been very, very, very strong. And I don't see anything in the technical chart that says it's going to just slow down.
Yeah, and you would think maybe an inventory build could actually throw a little bit of cold water on this one, but it did not do it.
It should have, but on the data, it actually broke out, and you're talking about the U.S. increasing its inventory over the course of the last month as well. I think despite the news being a little lukewarm, the price response was like who cares? We're breaking.
Yeah, no, I think it's a party market because, whether I should or shouldn't, I dive into the EIA as an oil nerd report. And sometimes on price response, there'll be a crude build, but gas and lean inventories will have beat, showing that there's, lots of consumption. That wasn't the case.
That wasn't the case here.
And so you literally have zero causal. You have the opposite. The market just wants to party today. Market just wants to party today. And maybe take back some of those oversold conditions.
Mark, what was interesting on the crude data is right when that report came out, there wasn't like the bearish volatility you every now and then get with algorithms. It was like, let's run. It doesn't matter what the data is.
They had decided ahead of time that they were running whoever
they love that 65 handle. They
are very powerful and they love the 65 handle. So,
you define who they is. Yeah.
Well, they liked it.
I knew who you were talking about. You knew who I was talking about.
But they
is self-defined.
They have a lot of money that can influence a day's trading action.
Maybe they had something to do with JP Morgan giving Jamie Dimon an increase in bonus today.
Yeah, listen, he probably earned the bonus. I saw it, but whatever. That's not news to me. I saw those headlines everywhere, and I'm like, all right, Jamie Dimon making more money.
Dude, it is hard work manipulating the commodity market. It's hard work.
He's the oldest CEO of one of those big banks in Wall Street.
Fantastic for you, Jamie.
Yeah.
And somewhere Putin is like, you guys are rookies. Wait for the big move.
Fair enough. All right. By the way, market's partying today, but I'll tell you where there's not a party. Gold, the dollar, they're not doing much. Quick flash through these two. Kind of hesitation at resistance. It's now kind of trying to find a little consolidation range. 1800 might be a little support there. Ty, what else you seeing in the chart you want to add?
It's messy. It's messy. I don't think anything's changed. It is trying to hold the 20 MA here. I mean, you really don't want to see this break below 1800 or else this entire recovery attempt is shot. So that said, kind of a key battle here at 1800. So far it's holding. If that breaks, you're probably going back and retesting the lows here.
Yeah. I think that could be in play, but right now I just see stability and neutrality. I'm not too worried about, volatility right here in the short term, Matt. I'm looking for a breakout at 1850 and then or 1845, whatever that number is. And then we'll reassess.
It's kind of like I said a week and a half, 2 weeks ago, when you asked me the 1800 level. I said, I kind of like it. I don't love it. There's a lot of chop between 1800 and 1840. There's still a lot of chop between 1800 and 1840. It's got to get cleared up.
That chop is. The dollar's a mess as well. It has been, kind of slowly fading up, but now it's banging its head up there. Ty, anything you see you want to highlight?
No, I just think weak dollar is better for stocks right now than strong based on the way things have been moving. So not surprised to see this unwind as stocks rip today.
We'll see if that can continue. All right, last one is Bitcoin, and actually a real nice technical fire back here from Bitcoin, that 29,000. It's so funny. I was reading the news here today, Matt, and I saw at least 3 different sources cite Bitcoin had a huge technical breakdown below the 30,000 level. And I'm thinking, I know real technicians who told me it's at 29,400, 29,000, somewhere in there for a very long time. So it wasn't this huge psychological break at 30,000. Actually, that's not the support zone. It's got a little
maybe if there was
back.
Follow through, right? Like, I don't know. But hey, listen,
didn't break support.
Or maybe update your technical parameters with new data.
It didn't
or maybe
break support.
Just continue to copy the first news headline you do and just run it for yourself, financial media.
It hasn't actually broke support yet. I'm looking at you, Yahoo Finance.
When's the last time you wrote a headline that was original or creative? That's what I would like to know.
None of them do anymore. It's getting really bad out there with news media and headlines. You can't. It's getting bad. They need more. They need more traders in those rooms.
They do. 100% do. But right now here, Tyler, we got 4
less
traders.
Marketers, news media, less marketers, more traders.
I would love to get more real analysis, technical analysis built into it. But listen, and I got that rant every day for a long time, believe me.
Yeah, but it is getting worse. And I know you don't want to rant on it, but it is constantly getting worse. And the analysis is getting even worse too.
It's becoming so much more transparent to hopefully
that's a great phrase for it.
Because they're all just trying to sell things.
Yeah.
It's just becoming transparent.
Yeah.
I'm just glad Matt said even worse and not even worser.
Worser. It's getting
Dude,
worser.
we're from Emery County. There's no limits to how
Worser.
we can butcher the English language.
Listen, we don't speak English. We speak American. What are we talking about?
We speak Emery County, So,
Ty,
wait for stuff.
Oh, go ahead.
Listen, tackle trading, making up new words is nothing new either.
No, it's not. I can make up all kinds of words.
Listen, is unmargined a word?
No.
It's not. Spell checks me every time. I don't care. People know what I'm saying. Unmargined returns. So.
Non-margined returns.
Non-margin. No, we can go non-margin.
You know why? You know what I'm talking about.
Oh, words with friends here on a Wednesday. I like it. It's happy hump day. And by the way, we used to play that bingo game. I'd like to drum that up and find all the words that we used to have in our lexicon and maybe bring them back.
Ilka did the bingo
Where's
game.
my man? Yeah, Ilka, send me that bingo card if you have an old copy of one. But Tyler, I do have a question on this technically. Is there anything here to get excited about, or is this just a one-day reprieve off support and we still got a lot of work to do, like is clear to me, but is there anything I'm not seeing right here?
No, I mean, the principle of patience and making Bitcoin break resistance has served us well for the last 6 weeks. I see no reason to throw that out the window. I would still say you break resistance and then I'll get interested. So far, that's kept you out of bad trades trying to fish for a bottom here. So I would say the same thing.
Yeah. Either you want to add anything on Bitcoin?
No, I whenever you're dealing with resistance levels, you're looking at support holding, but the key metric is to eventually find resistance and break out of resistance. No. And you got a ways to go before you even know what that level is. Yeah.
No, Bitcoin's been really easy for me. I've been cash flowing my Bitcoin proxies. I've been waiting for either momentum to return or a sell-off that is so low that I'm like, I'll give her a shot. But
the sell-off that's so low that you give her a shot is that 18 to 20K range. But yeah, it's got some work to do before you see any trade here.
And I joke, and I'm like, I never get what I want in sell-offs, and so that should be the biggest that this is a floor because I never get what I want ever.
Yeah, but
I never get what I want.
Hold on. I got a statement. I got a statement on that. But what you want is a zero price.
That's what I really want. Yeah, I want Bitcoin to 3,000 again.
You're never going to get that.
I know that. Well, I don't.
Okay, how many times have you heard Mark say, I'm waiting for a big sell-off? He gets a 60% sell-off, and he's like, I'm waiting for a bigger sell-off.
Thank you, Matt. I was literally going to point out we're down from 65,000 to 30,000 in one of the hottest products in the last 2 years that took off. What else do you want? Do you need 20?
Okay. If you want to know the answer, it's the relative percentage gain from where the breakout level. We're still up a high percentage. I just don't chase even on high percentages, even after a big sell-off. Bitcoin throws my traditional systems all out of whack because it's so crazy.
So at 20, are you a buyer?
Yes, I am a buyer.
On a red candle or on stability?
I'm not a full buyer.
No, well, of course not. You're going to wait for the analysis. You don't have a market limit order at 20.
Listen, you always listen. Like at a minimum, no matter how crazy I am about something, I still wait for at least inter-day signals and stuff, right?
Yeah, I like it at 20. I'm going to still wait for a pattern to develop at 20.
You don't ignore signals. Yeah. You just get more aggressive if good signals emerge.
So 20 is your level, though. That's where you want to see it stabilize.
20 is mine.
Developing. Yeah. 20, it's a good one, historical one. Like we talked about the other day, it's where the futures market topped off.
And
in fact,
Matt said, I think it was Matt that said it the other day, because I'd been in my head, 15, 17, but you were talking about 70% sell-offs, historical, what that equated to right there in the range. What was it? 19.6. We did the math.
It's like 19.6, 19.7. It's right in the 20 range.
I was like, yeah, there. I'm in. Fine.
Yeah.
I believe. Just do. In fact,
the powers that be. That's the sign. We got to move on. The powers that be.
They shut your mic off, Mark.
They shut your mic off.
They cold mic'd you there for your thought.
Oh, Jay Powell came in. Is like, enough talk about Bitcoin. Let's talk about dollar.
Moving on.
My gosh, you people are evil out there.
There's they again.
And you people.
Yay.
All right, moving on to stock talk here next. Let's move into and really, the news of the day is really around corporate earnings here today. There's a couple of different stories I thought were interesting, like Ford getting into autonomous driving vehicles. By the way, they're going to be putting those on the road in 2022. Matt, if you want to take an Uber through a Ford car that doesn't have a driver in, you can do it in Austin, Texas, or Miami sometime later.
I'll wait for other people to sign up.
That's not me. I'm going to tell you that.
Oh, Mr. Anti-Robots. No, it's
I'm
not
not
you.
letting a robot drive me to the mall. No, I'm
Mm-mm.
not going to do that myself. But again, just more stories around Ford's development, the way that they want to move their company forward, new tech. But I do want to talk earnings, Matt. What are the companies besides the UALs?
So they said they're going to have an autonomous driver vehicle in Uber by 2024.
It's a cool story. Technology.
That's not going to happen, by the way.
2022.
It's not going to happen by 2024.
Yeah, 2022. They think
regulators aren't going to let people into cars driven by autonomous vehicles in 2024. It's not going to happen.
I got big questions too.
It's not
Even if
happen.
it does happen, I ain't getting it.
Aren't we all sick of Ford and GM trying to be the next Tesla though? Like all the time.
You don't have to do it every week.
Ford, just build your amazing F-150. Come on.
Sell F-150s, make an EV version of one, and we'll love it.
Well, yeah. And if you would say, like 2022, next year, we're going to have autonomy. It's just not going to happen.
1,000 cars on the road in Austin, Texas. That's what they believe. Miami, Florida as well. Those two cities they targeted specifically. Okay. I don't believe it. We'll see it. All right.
It eventually happened. I just think 2022 is a very ambitious target to get past regulators.
It's just, yeah. And I don't even know how much demand there will be. I know eventually the wave of the future, they've always been forecasting.
Let's talk about it when they don't make it in 2022.
We will. I'm sure we'll remind them. All right. Stock talk next, Matt. Let's talk corporate earnings. What grabbed your attention?
Let's talk Netflix very quickly here.
I was interested in this report for sure.
Everybody is interested in Netflix. Netflix comes in. They actually missed on EPS. They came in at 297 versus the expectation of 316. Revenue came in my opinion, weak as well. They came in at 7.3 billion versus 7.3 expectation. That revenue increased 19.4% year over year. And again, like for new traders that look at a revenue number growing at 19% year over year, they might look at a big red candle today and be like, hey, they made money. What's going on? Netflix routinely makes between 30 and 40% yearly gains from a revenue perspective. And so a miss on revenue, in my opinion, even though officially it does come in as a beat. Guidance was increased on the EPS perspective. They came in at 255 versus the expectation of 214. Revenue guidance was affirmed. From a subscription perspective, they came in 1.54 million new subs. That beat the expectation of 1 million. Total subs came in at 200. A whopping, think about this number for a second, a whopping 209 million subscribers to Netflix. The big news that is coming out of Netflix, their numbers are missed, and that's really what's driving this sell here. And again, for growth companies that aren't growing, what do we say to them? Got to grow Netflix.
Mm-hmm.
You got to grow Netflix. They just didn't grow. But what was interesting is Netflix did announce that they are getting into gaming, guys.
Mm-hmm.
And so Netflix is now going to be putting a lot of research and development into gaming, and specifically on mobile. And so they will not have gaming on typical streaming through televisions and whatnot. They will have it on mobile devices, which, based on Netflix's internal data, a majority of their people do watch things on mobile versus on traditional TV and so on and so forth. So they will be looking at getting into mobile gaming. That gaming is not for an additional cost. They're looking to add value to their subscription through their gaming, and that was interesting. But I got more open questions on that at this point than I do any solutions here. So it will be interesting to see what type of gaming they're looking to get into there. I don't think Activision's worried. Let me just put it like that.
No, I don't think so.
Right.
But I don't think Netflix is trying to compete.
This is kind of like Google getting into gaming and Apple getting into gaming, and those cheap subscription type gaming type things. So it will be interesting, but that was the news. But the sell-off here today is a miss on numbers.
I think there might be a little bit more than the Google, Microsoft, Apple's getting in. I think it's a good comparison, but give me like a big picture chart here, Tyler. I'm interested in that part of the story. And I think there's more open questions about Netflix in the short term than answers, quite frankly, Matt. Mm-hmm. These numbers were not inspiring, right? I mean,
they're not going to get you out of bed.
No, they're not going to get you out of bed. And Netflix is down 4%, almost 4 to 0.2%, I guess. And that's within the market maker expectations. And it's been in this long consolidation for a couple of years. Whether gaming hits or not, the one thing I like about Netflix getting into gaming is they have a history of original content home runs. And
I didn't think about that angle.
they are the type of people, I don't think they're just going to go out and, buy franchise. I think they'll do that. I wonder if they've got an angle there, Matt, with the way that they collect data, the way their algorithms work on the back end, the way that they can create original content to where maybe a game off Shadow and Bone or a game off The Witcher from last year or a game off of these popular series that come around.
Interesting.
Could they actually find a way to weave their original content with their gaming strategy over time? I'm interested in that. And we're not going to get answers to that in the short term, though.
But when was the last great game off TV produced content?
Maybe the other way around. Maybe they create games, then they can create content.
I think it's more the other way around right now, where they're looking to create games and they create content off the games. Yeah. Again, I'll just say this. When was the last great movie adapted from a game?
When was the last movie adapted from a game?
The Witcher was adapted.
Resident Evil?
The Witcher. But that's not a movie, that's a series. But The Witcher was adapted off of a game.
Again, I think it's, and don't get me wrong, I'm not trying to throw cold water. I'm just, I don't think it's that exciting, honestly.
Mm-hmm. I'm interested. I'm definitely interested. But whatever that interest is.
I'm interested in ultimately a breakout of this weekly chart. That's really the only thing. Their gaming thing and what they do with it, I think it's going to be years in the making. And whether or not they're able to have success in developing content off those games, I think that's an open question at this point. Mm-hmm. And again, anything that they're gaming, they just made the announcement. So anything we talk about is just going to have more questions than answers.
Yeah, they're not going to get answered this quarter.
And I think like Tyler or other technicians would be, when they figure it out, I'll see it on that breakout.
On the chart. Do you buy into any of the narrative? Because I read through their full report last night, when I was doing the huddle. Do you buy anything into the narrative of them making excuses about comparables year over year?
No.
Yeah. Because they pointed to 2019 like 10 times. Well, from 2019 till now, we're doing fine. But from 2020 till now,
everybody does that because they do it against what other companies have done in terms of their recover. They've recovered better. When you look at Netflix's year over year, they're not good. Mm-hmm. When you look at Netflix year over year, they're not good because Netflix last year was amazing. It was we were in the middle of the pandemic and everybody and their dog was doing nothing besides Netflix. And so when they compare it against last year, Netflix doesn't want us to do that because when we compare it against last year, we're only up 19.4% year over year, and all the numbers don't look nearly as good to when they compare it to 2019. No, I don't. I personally don't find. I find that to just have them use excuses more than anything else.
Also, something that I didn't even think about it, and so I'm bringing it up for the first time on that. I apologize because it didn't even occur to me that Netflix is down. But you know who else isn't partying today? Peloton, Zoom. Market's euphoric. The stay-at-home stocks, because I don't look at this normally anymore because COVID hasn't been in the news for a while, but so many things are partying today, right? The stay-at-home stocks aren't. Maybe some little algorithmic action.
Well, I don't think that's pandemic stuff related. I think Netflix got sold off, and Netflix is a darling in that area of the market.
Yeah, I think that old playbook mark is probably disconnected at this point.
Oh, yeah, that's why I haven't followed it. And so I just did a quick check, and I'm like, they're not. None of those stocks are up today.
No, I have those stocks down because Netflix is down.
So
it's got a while technically, though. There's no doubt. Tyler, I mean, is there anything that would get you even interested at all here? It's neutral.
No, it's like IWM in the middle of the range. You need something actionable. You need something that draws you in, and the first down day after lukewarm earnings in the middle of the range, there's so many other things you could do.
Yep, I agree. Let's move on to Johnson & Johnson, J&J. Now, Johnson & Johnson comes out, reports $2.48 a share versus the expectation of $2.28. Revenue came in above expectation at $23.3 billion versus the expectation of $22. That resulted in a revenue increase of 22% year over year. They also increased both revenue and EPS guidance. The market response here is muted. I kind of like a breakout, but not until it does break out here. Tyler, what's your take on it technically?
Yeah, it's a consumer staple stock, so there's not much. There's not much, I think, reason to front run a breakout or get crazy feeling like you're going to miss it. I mean, it's clean. It tells you there's resistance at 171 and a half, 172. You got a little ascending triangle on the weekly chart. Like it's nice, it's constructive, but what do you do today? You just wait, let it take out resistance, and then you do something.
I love the point you just made. You said it was a consumer staple stock, so there's no need to even think about front running here. Sometimes we do that on growth because of the potential of a breakout on growth, correct?
Yeah, because you can miss it. Like if it rips, 6% the first day, it's like, well, shoot, I should have bought it the day before.
Yeah, but we don't really have that same degree of hesitation on Johnson & Johnson or stocks like this, because on a breakout, not a lot of times do they rip up like that. It's a staple stock. I agree. Wait on a breakout, but their raw numbers on Johnson & Johnson were actually fairly decent. Breakout does maintain alive there. And then let's go to Verizon. And Verizon comes out, reports $1.37 versus the expectation of $1.30. Revenue beat the expectation of $32.6 billion, coming in at $33.8. That resulted in a 10.9% yearly increase in revenue, and they also had a slight increase in EPS guidance. I got nothing to see on this chart, though.
No.
Nope.
This might be a mark chart, though. Dividend payer
It's any dividend value pickup at the bottoms. You're looking at 54, 55. Yeah, but
I mean, it depends. I mean, Verizon. I mean, this is because I have a little portion of my portfolio that is defensive. Like not everything has to be exciting, crazy. Everything that defensive. Greg Holmes, right? Greg Holmes approved portion of the portfolio. The only question I have is: do you bottom fish in Verizon? Do you go with strength in some of the soft drink companies? That's the internal debate I'm having on allocation of money.
Yep. Okay.
And then the last one, just more of a technical one, but I kind of like the breakout here. NDAQ, please. The Nasdaq comes out and reports earnings of $1.90 per share versus expectation of $1.74. Revenue at 73. Revenue came in a whopping $1.4 billion versus the expectation of $807 million. Really good beat on revenue here. Revenue only grew about 1% year over year, but a very, very good beat on quarterly revenue expectation. A beat and a beat here, guys. What's your read technically here on the breakout of 180?
Dude, it's gorgeous. It's gorgeous. And look at how it was completely unfazed by the drama in the stock market the last 2 weeks.
Yeah.
Basing at the high, showing the relative strength. They didn't want to sell it ahead of earnings, despite, the stock weakness elsewhere. It's nice, man. It's a pretty clean breakout. The challenge for me is it's up 3% today. It was up a couple percent yesterday. Tough entry, but reaffirms the uptrend. Just reiterates it's a buy on dips, it's a buy on setups. This is where you look for a secondary pattern coming in after the earnings move.
Well, it's kind of like you just said on those breakouts on growth stocks. Sometimes they just run so fast, so far, and you can kind of have the same type of philosophy on earnings runs here as well. It just, you got to love the breakout, but you don't love the entry here. And so you just got to wait for that secondary pattern that we've talked about extensively in previous halftime reports of being a little patient, putting it on a watch list, wait for that Cody special, that dip back down to 180, wait for a little bit of a high base to set up. And again, you love the breakout because it continues the trend analysis. You put it on a watch list, wait for the secondary pattern.
Agreed.
I like it. That's all I had for earnings roundup today.
And obviously a lot of these names are some of the more defensive names in the market, but we're going to start getting that a little bit spicier as we keep moving forward. A little bit more volatility next week.
Next week.
The tech companies.
Next week gets fun.
Yeah, I agree.
It goes banks, Netflix and overreaction, and then the real fireworks begin week 3.
I don't know, man. You don't love those utility earnings, mid-August. We can get some deep dive into some of those.
Oh, I can't wait to get into.
You haven't lived life till you've sweated Southern's earnings report.
Sure. Yeah.
Listen, and I would say you're playing life wrong if you're sweating Southern's earnings.
You're definitely not unmargined if you're sweating Southern earnings.
Good one. one.
Oh, too funny.
Well
All
done.
right, let's move into our last segment here, Tyler. And you know, every Wednesday we have this fun thing we do where you get to dive into something in the options market, whether it's a strategy or two different strategies where you cross compare. You know, we do it in different ways. Sometimes you highlight implied volatility cycles, you know, things that were related to options trading out there. And Coach Tyler is one of the best options educators and traders that I've known in my career. So we created this segment we call Jedi Options. And Tyler, you're going to highlight one of the banking stocks that actually Coach Matt made a focus of yesterday when we were in our Queen's Court bit of analysis. You know, tell us what you got here for Jedi Options here today.
Yeah, so banks in general, these get grouped into value stocks and or cyclicals. These have done very well during the reopening. They're also connected to inflation and, more importantly, interest rates. So rising long-term rates tend to boost banks. One of the reasons they fell out of favor here recently is because when you look at interest rates, specifically the 10-year yield, that has dropped considerably. So took the wind out of the sails of bank stocks, which means you got a pretty big pullback in some of these bank stocks, right? Which, you know, if you're tapping into your inner Mark, you're saying, hey, I wanted a pullback. And unlike Mark, I'll settle for a 20% drop versus 90%. You know, maybe I'll do something here. So with that in mind, you take a look at the financial sector. I will say I do like the bounce back. Financials, banks have fired back here. So haven't been completely left for dead. So I think bottom fishing and financials make sense, right? I kind of like the just the thought process of where Matt was at with KeyBank on the fundamental side. And you look at the technicals, looking at the weekly chart, this is where the case is the strongest from a technical perspective. From a percentage perspective, 2365. I think this will be worth adding here. So 2365 was the peak. 2365. This week's low, which would be Monday's low, 1790. You know, you're 24% off the highs. That qualifies as a pretty substantial dip. You take 2020 out of this and the pandemic, and you know, KeyBank has been stable and a dip, a good buy on you know, substantial dips like this. So you got the 50-week moving average coming in. I love the bullish hammer candle this week. So I think you've got a pretty compelling entry point here, and you have some confirmation based off the fire off of support. What you will see that makes some people maybe a little skittish is you've yet to see the daily trend turn back up. So from a trigger perspective, you just kind of have to decide how important that is to you. This is going to be a longer term trade where we're going to be in this for a couple of months. I'm willing to give myself a little more room for error and not be as OCD about having a perfect entry price. If somebody wants to wait for this to take out the 20 MA, fine. I like the strength of the fire back off of earnings as well. I think that was one of the main reasons Matt brought this up the other day. Really good fire back on good earnings. So just like we said with like Coca-Cola, some of these other good earnings announcements, just makes you more confident that it's going to turn and go higher, that this sell-off is a buying opportunity because they just reiterated, hey, we're a good company, our earnings are good. That should boost the stock for the next quarter. All right, so that's the pitch from a technical and fundamental perspective, and that's kind of where the sector's at. The question is, how do you want to play this? I think it goes up longer term. How do I want to play it? Well, first of all, it's a $19 stock, very cheap, which gives me the ability to do a lot of different things. I don't have to, I feel like our options are somewhat limited when we're dealing with something like Amazon, you know, $1,000 stock. With this, you can do darn near anything. And so for me, I look at implied volatility to get a sense of maybe what might be a good fit strategy-wise. The IB rank isn't all that high right now. If it were, maybe we'd just sell some puts and be done with it. But the IB rank is low, and I want to build a trade where I can give this time, you know, a couple of months. So what comes to mind is a bull call diagonal spread, which is similar in nature to a covered call. So similar, in fact, that if you build it a certain way, we often refer to it as a poor boys covered call. And so what I'm hoping this next little, 5-minute conversation will do is help the listeners understand how a bull call diagonal spread, a poor voice covered call can be a very simple trade. Don't have to overthink this. So the first thing I'm going to do is I'm going to go buy a longer term in the money call option. Because I'm long term, I want to be bullish. I'm going to go buy a long term in the money call. And when I do this, if I'm trying to create a poor voice covered call and make this a substitute for buying the stock and then selling covered calls, I got to buy a call option that's a good substitute for the stock, that's a good proxy for the stock, that behaves kind of like the stock would behave. And the easiest way to understand that is to realize that when you buy 100 shares of stock, you get a 100 delta. And so if I'm going to buy a call option that I want to behave somewhat like stock, I can't buy a 20 delta call option because stock is 100 delta. I need to buy a call option with a higher delta closer to 100. So it turns out, though, that you don't need 100 delta. I mean, that's pretty expensive to go that deep in the money. You buy around like a 70 delta call and you're probably pretty good. More on that in a second. From a month perspective, I don't want to buy September because I want to go a little further out in time. December for me is sufficient. If somebody wanted to go to January, that'd be fine. But if I buy a December call, I can sell August against it. I can sell September against it. I can sell October against it. At least 3 months, and I think that's sufficient. Maybe I'll sell November. We'll see. But that gives me enough time based on my expectation here. So looking at the December options, looking at the delta column, again, it's got to be a higher delta call to be that good stock substitute. I would probably either buy the 17 strike call. It's got a 76 delta. Might even be able to cheat a little bit and buy the 67 delta call. I still think that's going to be high enough to behave like stock. But just to make this as clean as I can, let's buy the 17 delta call. It's going to cost me $3. It's cheap, very cheap, for two reasons. I mean, number one, it's far cheaper than buying 100 shares of stock. That cost you $1,900. And number two, it's just a cheap stock, so calls in general are going to be cheaper. So I'm going to buy that for about $3. And I could leave it at that, right? I could say, hey, we like the dip, we like the weekly chart, let's just straight buy calls. But the challenge is that's a really aggressive trade, and I don't know that I want to be really aggressive. So to tune this down a little bit, or to tone it down a little bit, we're going to sell a short-term call against it. So, and I would just use the same logic I use on a covered call. So normally on a covered call, you sell maybe 30 days out, sell an out of the money call option. If you have the tackle 25 system, we usually teach a delta around 40. 30 to 40, I think, is kind of the ballpark. So looking at what's available, I got a 30 delta call or 29 delta call here, or a 40 delta call. I want to give this room to bounce. And you got 30 days. So I'm going to go to the 30 delta, pick up about 30 cents. Okay. That's going to reduce my cost by about 10%. Okay. So it's going to reduce my cost a little bit. So if I control click on the bid, that's going to sell the AUG call against the December that I purchased. This is the structure of a bull call diagonal spread. If I right click and analyze, it's going to give me the risk graph. And this is it right here. So for those that understand what the risk graph of a cover call looks like, this is similar. If the stock goes nowhere, looking down here, stock goes nowhere, I'll make about 20 bucks. Okay, if the stock heads up towards 2050, could make as much as about 100 bucks, which on a $2.73 trade, 20 bucks, I don't know, 8%. If we go nowhere, if the stock heads up towards 2050, you're over a 33% return. Those numbers are far better than what they would have been on a traditional covered call. So game plan here, final piece, I'm going to let this ride close to August expiration. Ideally, stock heads up towards 2050. And then I'll look to buy back the August call if it's in the money. If it's not in the money, I'll probably buy back at a nickel or something. From a risk perspective, my max loss is what I paid. But if I wanted to reduce the risk, I could say, hey, if this breaks a major support zone, maybe the 50-week moving average, call it $17.50. If it take that out, maybe I don't like it anymore. My risk is maybe 100 bucks, which would, be far less than the 273. So that's kind of where my head's at on this trade. Give me your feedback.
Well, let's bring everybody back in here for a minute. And obviously, if we go back to the chart on KeyBank, there's a couple things I want to highlight. Number one, this was an earnings response. Part of the reason why Coach Matt liked it so much yesterday was the basis of their earnings. And Tyler, I think is a good point that you brought up as to why it's been maybe out of favor for a little bit. As interest rates drug down, there's correlation there. Matt, what do you think about the diagonal spread here post earnings?
Well, I did like Key based on the raw earnings numbers, but it wasn't just the raw earnings numbers. It's the fact that it's, the financial sector in general is having a very good earnings season so far, in my opinion. And unlike other seasons where the financial sector was in a different technical condition, the financial sector was under a little bit of pressure coming into earnings season. And so I do like Key around that 200-day moving average. I like the response yesterday. The bullish engulfing candle following earnings I felt was very, very strong. But then when you look at, again, I don't want to go too much detail because we did talk about Key yesterday. But when you look at their fundamentals, like you're seeing a stock that has a 11P ratio, a 9.74 P ratio, a PEG of 96, and a price to book of 117. Those are Warren Buffett type value numbers, guys. That is wonderful, wonderful fundamentals. And so I do think after the substantial drop in Key coming into the 200-day moving average, a fired back response to their earnings report yesterday, were all very positive indicators of this stock has found a little bit of a bottom here. And even though I don't like Key from a directional perspective, Key is a cash flow type instrument for me. When you're comparing the covered call versus the port, like Tyler would call the poor boys covered call, the diagonal call, where you're substituting the stock for the call option, when you compare those two, and Key's a good covered call stock as well, you could go out right now following this earnings report, buy Key Corp for $19.53, buy 100 shares, have a cost basis of when you don't use margin at all, we call that unmargined.
We have a lot of words flying
when you're
around here today.
Unmargined, that would be a $1,954 cost. And you could go out there and you could do that traditional covered call system in the Tackle 25, and you could sell a short-term call against that 0.40 delta, and you could bring yourself in a nice $50 in cash flow right now, and you hypothetically are telling the market that you're willing to sell it at $20. That would result in a $50 in cash flow per call option, 2.5% return on investment. Nobody's going to shake a leg at that. Nobody's going to be like, "Oh, wait, that's not good."
Matt, plus theoretically, the extra $50 on the call up went up to a 5% if you got called out.
Yeah, if you get called out, you sell it at 20, and you reset the parameter return. 5%. That's a fantastic scenario. But what the Jedi is doing in Jedi Options here, Tyler Craig, I'm going to have to change his name from the architect to like something that, what Jedi would Tyler? I'm going to have to think about that. What Jedi Tyler would be. He can't be Obi-Wan.
Mace Windu.
He can be somebody else. No, we'll talk about that later. Let's
not
sidetrack my point.
All right.
My point is this. What the Jedi just showed all of us is how, with a little bit of understanding of the dynamics of the options market, where you could substitute the stock, and instead of putting out $1,954 to own the 100 shares of stock, you can dramatically reduce that by going out in time, buying a call option, reducing your cost basis by 85%. So you're reducing your cost basis, and that doesn't, and to the trader, to the new trader, you're like, oh, now I can afford it. That's to the trader. They now have $1,700 to go do more trades with. That's to the trader. And so what Tyler is saying is we can reduce our cost basis by $1,700, reduce it by 85%, give us more capital to go do other strategies with. And instead of getting the $50 and 2.5% return on investment, now you're only getting $30. You're reducing your cost basis by 80%. You're also going to reduce how much money you're bringing in from the sale of that call option. You now get $30 on the sale of the call option, But because you're reducing your cost basis so dramatically down to $300, a reduction of 85%, now you have a 10% return on investment, which means the trade, from just a mathematical perspective, the trade makes more sense than the covered call.
Mm-hmm. I like the diagonal idea. The only question I'd have for you, Tyler, is could you go further out than the December? I mean, could you map this out and get an extra bit of time? That way you could write cover calls against that underlying lead for quite some time if it does end up performing and behaving in the way that you want. Was there something about December just because of the way you like to play them? That was my only question.
So I think that many times people buy a 1-year option or 8 months or something, and they start with good intentions. But over 6 months, 8 months, 9 months, the stock's, falls out of favor or something, and it drops a lot. And you get stopped out. So I think oftentimes you start with good intentions. You pay all that extra money to buy that long term. Like if I went to March, for instance, bought the same strike. I mean, in this case, the cost isn't that big of a difference because it's a $19 stock. Mm-hmm. But oftentimes you'll pay hundreds of dollars more to go further out in time, and you'll still end up only selling 2 to 3 months against it anyways.
Sure.
So I would rather buy December, sell 3 months against it, reassess. If you still like it, rebuild the trade, close December, go buy another 6-month option. I feel like if you do that, your ROI is going to be better because you're not paying as much up front. So your return on investment is higher per month, and you're more adaptive. So if the price changes dramatically in the next couple of months, I can change my strike to a new one that's lower or higher depending on what I need. And that way, because oftentimes, Tim, let's say it works and the stock goes up like gangbusters, and your call goes deep in the money. Well, I kind of want to sell that anyways and buy a new one. I bought a 70 delta call. Now it's a 90 delta call. It's worth a ton. I don't need all that capital tied up. I sell it and buy another 70 delta. So you're probably going to make adjustments anyways. So why not just go with the cheaper route up front?
Makes sense. Makes sense to me. All right. Jedi options there. Any other thoughts, Marky? Anything you want to add to that?
No, the only thing I have to add, I love the area of the market. I think the sell-off in a lot of these financial banks is overdone.
Gotcha. All right, back on the chart, back on the S&P. Let's start wrapping up this show on a Wednesday, and let's get final thoughts. And Mark, while I was just with you, let's start with you. Final thoughts and any programming notes we got.
Listen, programming note, Trade Masters got Frank Martin and Greg Holmes bringing some trade ideas on a Wednesday night. I just love trade ideas. I love them here on Jedi Options. I love them Trade Masters. I love them with Scouting Reports. Tackle Trading does it very well. Trade Masters tonight. And just on a personal note, listen, I'm giving up soda today. So wish me well, and want to get healthy, because I believe that we will all hit our financial dreams if we stick with trading and investing. I think this stuff works, and I want to live a long, prosperous life to see it. So giving up soda today on a personal level.
Well, that's big. Good luck with that.
No, I'm not giving up booze, cigarettes, and all fast food.
One at a time, brother.
All of that, but one step at a time, right?
There you go. Tyler, final thoughts.
I missed that. He's giving up soda today?
Yes.
He said that, yes.
Well, congratulations, Mark.
Well, let's see, but my daughter's already like, you're sus. I don't believe you've given it up yet. Where's this can,
Yeah.
Okay. My final thoughts are, look, sometimes as we talk, this halftime report takes an hour and a half. Sometimes the market slips a little bit. It ain't slipping at all here, Tim. Looks fantastic. Love the strength. We're at the high of the day. Really loving the small caps.
It did every day last week, right, Tyler? We'd start the halftime report, and then by the time we're done, we're like, oh, gotta look at this breakdown that's occurring.
What's the key difference?
Matt Justice is here.
That's right.
That is indeed right.
That is right. I'm back. Markets are back. Everybody's fantastic.
That, Matt's gone for 6 days, including Monday. Markets down.
Listen, we can talk about any other variables you guys would like to talk about, but the one known variable is I am back. We're back. Markets are fantastic.
You can't argue with the data.
No,
the data is there if limited,
True. That is true. Oh, goodness. Maddie, final thoughts from you, though.
I just had my final thoughts. I'm back.
I like
it. I absolutely love the Jedi. I love Jedi options every single week over the course. I don't know what you guys did last week, so I can't attest to that. But every week since we've been doing Jedi options, Tyler has brought the magic. And, I look back to some of those trades that Tyler's been talking about in Jedi options, and they have been just fantastic. And I love the detail he goes through when he's really dialing in that option, and specifically what option are you buying, what option are you selling, why you're doing that. I just love that Jedi option segment so much. Great job, Tyler.
It's always a fun one for me. It's one of my favorites as well. And each of our segments have their own.
What's my favorite segment we do I got it. For me, it's Jedi options. I love Jedi options.
I'll tell you what,
you're just saying that because
wait. On Friday, I will tell Friday on Friday, Frank, your charts are the best. Your segment's the best. Everybody at Tackle agrees.
Yeah. I see what's going on
here.
I
get it.
Mama Justice, by the way, over the years, Tyler, she had a thing where she'd tell every one of her sons, "Hey, you're my favorite."
She only meant it to one.
Sure, exactly. We know who it is.
We know who that
is. It's none of us here.
It's none of us. We're not on that list.
By the way, Tim, Team Phoenix here in an hour got our trading lab this week. Yep.
Oh yeah, 3 p.m. Eastern each and every Wednesday. Team Phoenix. I know that's been going swimmingly. I've been watching the Discord conversations.
Can I ask you a little bit about that? The Discord conversations are happening. I love those conversations. I see all of you coaches over there quite a bit, leading those conversations. But really do enjoy even just the questions and the give and take and just the conversations that are happening in Discord. If you're a part of the Tackle Trading Labs, whether it's with Coach Mark M, Tyler, or just have access to all of them, and you have not been checking out the communication on a daily, weekly basis in between your labs, definitely check into Discord, the Tackle Trading Discord channel. Remember, anybody with access to Trading Labs gets access to those Discord channels as well. And they're just starting out, but I do look forward to see where those conversations go over time. So definitely make sure you're taking advantage of that part of the communication as well.
Yeah. And if you want to sign up for any Trading Labs or a pro membership, you can find all of that information on the store tab at Tackle Trading. I'll drop a link in the chat.
And you can always email Mark at team@tackletrading.com and he'll hook you up as well.
And here's the best part out there. If you're watching the show, you've never signed up for one of our memberships, it's a trial. So you can come and see what it's all about, get a good feel for the community, get a good feel for these coaches, and try those Trading Labs out. You get a 15-day trial on us.
Those scouting reports were strong this week so far.
Bro, they were hot. They
held up
popping
on Monday, and they're popping.
Yeah.
Love those reports this week.
All right, we're out, guys. Trade Masters tonight, 7 o'clock Eastern, right here on YouTube. Make sure you come and attend that live. Until then, though, and we'll be back tomorrow with the halftime report. Coach Tyler will be back with Coach Greg, and we'll be breaking